Simon, good afternoon. Let's kick off with what we've seen on the JSE All Share today, obviously following international markets higher. Just a broad-based opinion from you?
Evening, Bronwyn. Just a rally. I mean, left, right and centre, led by the financials with one or two red stocks. But people are just buying this market. Last Monday, we had a bit of a pullback. We thought maybe this would be a little bit more sustained. Pullback lasted about a day and a half, and the bulls were back and firmly in charge.
Why are investors not heeding caution right now? We have got that school of thought that says we're in for a double-dip recession. The heavy hitters like the Warren Buffetts saying, beware, there could be trouble on the horizon. What are your sentiments as to this continued bull run?
You're right, Bronwyn. I mean, your previous guest and the people you're referring to, and these are sharp minds. You're out there saying, you know, we're not out of the woods necessarily. It could get, you know, double dip. Things could suddenly turn down again. But at the moment, the momentum is on the up, and I think we're just seeing a lot of crowd following. At the moment, if you want to make money in this market, it's real simple. You've got to be buying it. It's as simple as that. And I think we're seeing that. And it becomes self-fulfilling in a sense until I suppose one day the music stops and we see who's got a seat. But for now, it's on its way up, and the market's ignoring core fundamentals and just it's heading up, and buying is the motto.
But aren't these the signs of a clear suckers rally? All that money that's been sitting on the sidelines waiting to be deployed is being deployed now because people think that they have missed out on the opportunity to get into the market. Aren't we at heady levels to be putting money into the market right now?
Bronwyn, I think you every chance that you're right there, yes. I mean, if we look at a couple of things, just the way the volumes have run up. You know, it's 3 or 4 months ago, 6 or 7 billion rand days were par for the course. Now we're back in 10 billion territory, and that suggests more money is coming in, and it does suggest that usually people wait too long to enter it. So they're trying to time the market, and then when the enthusiasm is at its peak almost in a sense, people are piling in, boots and all, and it's simply too late. And undoubtedly that is the risk that we're facing. The question, I suppose, is where you got in. But nonetheless, is this market expensive in places? Pretty much yes, and pretty much across the board, you're paying premium prices for stocks that are, the outlooks are at best, we're going to say average. In some cases, the outlooks are scary.
And are earnings supporting the valuations? That's the big question. I keep asking it day after day on this desk, given the fact that we've got a heavy data flow in terms of earnings this week.
Short answer, I would say no. And I think, you know, in essence, what are the earnings? They are well down. But I think what happened to a fair degree, particularly with the US earnings season, is that everyone's focusing on the fact that 70-odd% of stocks beat expectation. That's brilliant, but where was expectation? Expectation was so far down in the basement that to beat it was almost a certainty. And I think we're almost focusing on the wrong side of the picture when we say beating expectation. We should say, well, what are the actual numbers? And those numbers that are coming through, yeah, better than expectation, but by no sense of mean were they brilliant. And what we need to look at is the consumer, and the consumer remains under pressure almost any measure that we use.
Some of the big ones out this week. We've got ShopRite out tomorrow, Murray and Roberts out on Wednesday, Imperial also out with their annual results. We've got a lot of smaller companies, Santam later in the week out with their interims, Massmart, MTN with their interims, Woolworths with their annuals, and Impala Platinum with their annuals. Any of those specific stocks that you're going to be looking at for specifics?
ShopRite, absolutely. They've been a class act. They were one of the few stocks that were green last year, up about 20% when the market was off 25%. Trading update's given us a bit of a hint. We want to see how they're doing in Africa. We want to see the split between the Checkers and the ShopRite brands. So I think I want to delve into those. Murray and Roberts as well, to see how their order book going forward is happening, and particularly in terms of international and the like, but also what is their reliance on infrastructure spend, and are they picking up any sort of non-infrastructure spend in that particular space? And then again, the retailers, the Massmarts, the Woolworths and the like, to see how that consumer is doing. Expectations are they're having a tough time of it.
Simon, and just to finally, we've also got CPI, PPI data. Do you expect that to be market moving this time around?
Probably not. CPI, people are looking for it to come in at around 6.6 versus 6.9 last time, unless there's a major shift in any one direction, and certainly that's not expected. The risk could be perhaps electricity and wage increases, but we're looking for around a little bit of a move down there. And PPI probably coming in at around the minus 4.7 versus I think 4.5 last time on the negative side, unless they really surprise. But I think the market's kind of got a grip on the inflation in terms of expectation. It's moving in the right direction. It's doing it slowly.